Let's bring in our first guest for the hour. We've got Julia Friedlander. She's Atlantic Council C. Boyden Gray Senior Fellow and Deputy Director at the GeoEconomics Center. Julia, walk me through your thesis here on how you think this is going to play out in terms of getting that bump in the stimulus checks. Our reporter Jessica Smith earlier alluding to the fact that there are a number of Republican senators who've already come forward to say, yes, in fact, we should increase it from 600 to 2,000. What do you think are the chances of the Senate passing this?
Oh, I'm not, entirely sure. I think the chances are rather have increased over the past couple of days. Again, you're seeing increasing bipartisan consensus here that Americans are in dire financial straits, and that $600, while long needed, and especially in the context of the long held out negotiations over a second rescue package, may not really suffice in getting us through the long COVID winter ahead. So we'll have to watch the tea leaves over the coming days to see whether Republican votes are there.
Yeah, it gets tricky. I mean, it's a tricky spot to be in when you think about the popularity of just giving Americans free cash essentially here in a pandemic. But obviously, there are questions raised around the deficit that hadn't really been raised before. People will point out, well, look, money is going elsewhere around the economy. Why not put it back into the hands of Americans? When you weigh that option, though, in this recovery, how important of a tool is it, considering we have seen saving rates boosted? Is it the most effective thing to maybe be spending on now, maybe versus also putting money behind the vaccination rollout and making sure states have the ability to make that happen in an efficient manner?
Oh, thanks for that. I mean, vaccination rollout is part of the second package that was signed by the president. Now we're coming days after the unemployment benefits elapsed, and as the Paycheck Protection Program also came to a close, and so the boost that we had coming through Q1 and from Q2 to Q3 was largely due to those. To the CARES package, again, passed in magnitude of $2 trillion. Now, as some of those benefits started to lapse, we were starting to see unemployment numbers start to tick up again. And some economists were saying we could be on the brink of moving into a double-dip recession. Now, that you can't really bet against that in the current economy, I think.
Having said that, one of the key pieces that's missing in this $900 billion package that was signed was a directly sent to state as well as cities. No question, they have been struggling in a big way because of the revenue loss. How much of that do you think is needed come the Biden term here when you think about the pain that's already being felt on the local level?
I think it's a big element, and it's almost an ideological debate going on in Washington right now. And if you talk to legislators and governors, mayors around the country, they say state and local governments are large employers, right? They're not just the efficators of the system. They actually are providing large-scale employment within their jurisdictions. So that direct assistance to those municipalities should parallel what is provided to private enterprise. Now, of course, that's going to be subject to a bit of a give and take in Washington, and was certainly the reason for the ultimate compromise that was reached over the Fed's extraordinary lending facilities to those jurisdictions.
And Julia, your note also raises another important issue here when we talk about inequality and what might be done to that issue here in 2021, because we're going to have the Biden administration coming in. We've obviously heard it stressed as a problem from Fed Chair Jerome Powell. Talk to me about how maybe the $2,000 stimulus check might do more to address that inequality, considering a lot of the richer Americans here who own stocks have seen a recovery here now to all-time highs. So how important of an element in your mind is that?
Sure. I mean, again, higher savings rates doesn't necessarily mean that Americans aren't using everything that they have to meet their everyday needs. So when $2,000 really is saying we're going to keep you held over until the economy recovers, and hopefully job employment figures aren't as precarious. Again, a lot of the job recovery that we saw was, you can add a job for 2 days and then subtract it again. That counts as both a job gained and a job lost. So again, unemployment figures don't really show the whole picture. When we look at a broader perspective, right, the stock market is doing very well, but it really isn't a reflection of the real economy. Now, a lot of the reason why those valuations are so high is because the capital injections went directly into the stock market because they couldn't in the real economy. So $2,000 is really saying we're going to hold you over until we have a more sustainable recovery, and I think that might be some of the thinking behind the ongoing congressional negotiations today. Now, just a couple figures to point out: real wage growth has not increased in this country since the late 70s. Okay, so the cost of living is going up, but money in your pockets, both disposable income and ability to save in expectation of harder times, has eroded over that period.
And Julia, to that point that you just made, it does feel like when you look at the market action, investors are looking 6 months ahead, saying, look, there is light at the end of the tunnel because of the vaccines being rolled out, the expectation that in the second half of the year, there's going to be a more significant bounce back. And yet you look at the reality on the ground in a number of states across the country, places like California, where there are very stringent restrictions in place, small businesses coming out and saying we may not be able to survive over the next few months. When you look at the job losses already or where the labor market stands, to what extent do you think those losses are likely to accelerate over the next several months?
Well, I think winter is the key there, right? I think construction sectors and seasonal employment really kept some of those employment figures from dying down. But when you go into a cold, what was most of this country is a colder season, right? When you can't host people outside, so the services sector and hospitality sector make up such a large portion of our economy. That means that cafes can't serve people on the sidewalk. That means that construction companies can't continue building larger structures and in time, right? So keeping all of those people on payroll for a longer period, or at least for the foreseeable future. So if you look at like the period from December through March, now that's always a time when employment dips in the United States because of the nature of short-term employment in this country. So it's a game of sort of cat and mouse here, right? How quickly can the vaccine actually be rolled out so that the recovery can actually accelerate when we get towards March and April? It will take time for that to seep down, for large percentages of the economy to be vaccinated and to be able to say, we're putting our population on secure footing.
Julia Friedlander with the Atlantic Council's GeoEconomics Center. It's good to talk to you today. Appreciate your time.